Hey guys, what is up? Here is today's Wyckoff Wednesdays episode. We're going to talk about our Arielfx strategy since you have been introduced on Cam Hawkins' YouTube channel. We are going to go over a little trade I took today, talking about our strategy, and we'll just go over it from there. So I'm back testing, or I've started price from this morning. It is the 2nd of March, 2022. And we'll be looking at price during New York. I trade during New York. I don't really like trading any other time, to be honest with you. So looking at the 5-minute time frame during New York, let's see what we have. So what we have is some relatively equal highs right here that we ended up running out. So we run those out and then we create more equal highs here. Also, we had some highs here, but this is the liquidity right here. So we run out these highs. Now, I'm going to introduce a term that we have been using for a while that we typically only use in our community, but a candle that runs a high is called a sponsor candle. So this is a sponsor candle, and we use sponsor candles to look at where price is purging a high or purging a low, especially during the New York trading session. So we end up running this high or these relatively equal highs here, and then we have some inefficiency resting down here. So we have inefficiency resting down here below this low, this low, and this low. So what we like to do as well is look at where retail liquidity is resting. And you can see that it was clearly going to be resting under these lows. This was a trend line. So retail trend line is obviously going to generate a lot of liquidity, right? Because retail traders are looking at, where they should place stops or where they should buy based off of a trend line or support and resistance. Like this area right here is resistance turned to support here. So what do? They buy after this candle, put their stop below it, and then price runs it out, pushes up higher, right? But price doesn't have the intention of actually going higher, right? It's just a run or a manipulative push right here. So we run equal highs. It's not a coincidence that we run equal highs, not just a singular wick high. So a sponsor candle has to run equal highs, not just a high or just a low. It needs to be a series of them. And you can see that even right here, we had relatively equal highs, and this is the sponsor candle. This is what grabbed that liquidity here. So what we do is you can take it off the open, or you can take it off the 50%, or you can take it off of, sometimes it actually retraces to the 70%. I don't know why, but it just does. So also you can see just in terms of structure, this was a high, a low, this low produced this high, this low produced this high, this low produced this high. So we have structure, right? Conventional structure telling us that we've broken lower. We have a sponsor candle that ran liquidity here, and now we should get some type of pullback. We can go to the open, or personally, what I like doing is I like just pulling fibs and entering kind of where I feel is fit. Usually it ends up being the 62%. It can be like the 70.5. The 70.5 works really well. It doesn't really matter. You could have entered at this inefficiency right here, but for me, there wasn't a really clear level to enter at, so I just entered at the 62%. That's just what's easiest. So 62%. I didn't use any of my targets for the fib because I was just looking at this area right here, because that's what I wanted price to mitigate. I wanted price to mitigate this inefficiency. So I set it at the quote unquote open, or the top of that inefficiency, because it doesn't need to go all the way down for it to be considered mitigated, right? So getting rid of everything just so we can watch this play out nicely. right here. We'll just let it play out. We can watch how price develops, and then I'll go over everything one more time. We had a lot of consolidation today. It was super annoying. So that's where it ended up hitting the take profit. We had a couple of volatility spikes throughout the day, like here and even here. But this was a really big manipulative push that kind of happened for no reason as far as I'm concerned. But again, I'll go over the trade one more time. So going over it one more time and showing you the concepts we use, something that we haven't really done before. I'm doing it now though, because we're introduced on Cam Hawkins' YouTube channel, and I want to give you guys a really good video and show you a little bit of extra stuff and show you our strategy that we have been using for a couple years. Honestly, I came on as a student originally, but Nate and Aiden learned this strategy about 3 years ago, and they started Arielfx after learning it, and that is kind of where it's gone, or this is where it has come to, is what I'm trying to say. This is the strategy we've been using for a long time, and now I'm kind of introducing the terms for free, but this is not all of it. This is just a super basic example. But again, this is right here. This is called the sponsor candle. It is the candle that runs out liquidity. And then after a sponsor candle, you want to see a break in structure, because a sponsor candle implies that it is going against the trend. If you run the lows, you don't want to see a retracement to go lower. You want to see a break of structure, because in order to play off of the sponsor candle forms here, right? Let's say this is the open and close. In order to play off of a sponsor candle, you want to play off of the open. In order to play off the open, you need to have a break of structure. Even this is considered structure. The break of the sponsor candle is considered structure, right? So because it is a high that produces a low. That's the definition of structure that I've been using across this channel and in a lot of videos. That is how I define structure, market structure conventionally. Higher highs and higher lows for an uptrend, lower lows, lower highs for a downtrend like this right here. So again, in order to play a sponsor candle, you need to play off of the open. If you have a sponsor candle to the downside, it's going to look like this. To play off the open, which is up here, what do you need to do? You need to break above, break structure to test it and go. And then for an opposite or the opposite scenario of sells, you'll have liquidity run out. If you want to play off the open right here, what do you have to do? You have to break this structure here. So again, sponsor candles, you want to see a break of structure, obviously, and it's better, to be honest, when you get something like this, when you break structure that's a little further back, because that's more significant, more pertinent. Yes, this high produced this low, but a sponsor candle is more confirmed when you trade not only above its open, but also above a structural high or low, depending on the situation you're looking at. So again, going back, sponsor candle forms right here, right, in the middle of the New York trading session, which we like trading because there's a lot of volatility at that time. You want to be trading with the volatility, use it to your advantage. So sponsor candle forms here after sweeping these highs, and again, you break below it here, but then you get a break of structure here that really validates that it's likely to hold. And if you go to the lower time frames, there really wasn't any inefficiency to fill. So pulling a fib to enter, that's usually what I do whenever I'm not 100% sure, about a region of price. But you could also taken it off of the close of this 4-minute candle. This is a consolidated candle. That's why it works. I'm not going to go into that too much, but you can see relatively equal highs. Sponsorship candle takes them out, has a break of structure lower, and you can see how these are respectively at lows here, run out. That's a sponsor candle here, right? Sell to buy. We create liquidity, trade into it, go higher. So you can see why this played out, right? And especially on the 4-minute, I didn't realize the 4-minute was so clean. Really clear highs, really clear run, very clear break of structure. This is the low that produced this high. Now the entry, pull a fib, because there's not a clear defined entry on it. Or what you could have done, something I do, is I'll place it above highs within an impulsive leg to the downside or upside, because I know that we need to see some liquidity taken before we move down. So this was 1 to 3.5 RR. This was a really, really solid trade. Yeah, so that's kind of why I took that one, and I can go over potentially one more trade. This one, nuclear. I have no problem admitting that. I'm not going to go over the logic on that one, but this is one of the trades that I did take today. And if I can go back in price, I'll try to find another example. A lot of crazy price action has been happening lately, to be honest with you, but some of the markets have been moving nicely. NZD JPY usually is a pretty nice market, to be honest with you, but let's see. If I can't find another example quickly, I'm not going to bother, because I want to find or show really obvious apparent sponsor candles, because that is a large part of our strategy. But this video is approaching the 10-minute mark, so I am not going to go over that right now. I will just return back to Euro USD. So this is a little trade that we took today. You can see how it ended up playing out. It actually did fill the imbalance completely, took out this low, but I didn't trade it like that at all. So I don't want you guys to think that that's what happened, but nice little trade on it today, just showing you guys, you know, that it does work. Sponsor candles are a large part of our strategy. Wanted to introduce the concept to you guys, and you can see, like right here, this is not a perfect example of it, but liquidity is run out here. This is a sponsor candle here. Took out the lows, and then look at what happens when price returns to it. Really nice, solid reaction. So anyway, I hope you all enjoyed. I hope that you're glad you found us from Cam's channel. And I'm just looking forward to answering any questions you guys have about our strategy, or just anything about Arielfx. I'm here to speak. So thank you guys, and we will speak to you on the next video. Bye guys.